This 4th May 2024 Berkshire shareholder meeting was the first such meeting after the passing of Charlie Munger, to whom an emotional tribute was duly given. As expected, tens of thousands of investment enthusiasts attended the event. In this video, we have crystallized and summarized 8 wisdoms shared by the Oracle of Omaha during this much-anticipated event that lasted 5 hours.
And if you understand businesses, you understand common stocks. I mean, if you really know how business works, you are an investment manager. How much you manage.
Wisdom number 1. Investment is most intelligent when it is most businesslike. To invest successfully, you first need to understand the business you are investing in.
As the world gets more sophisticated, complicated, and intertwined, more can go wrong. Going through here, exploring the possibilities of the different things that could happen. But you do want to be able to act when it happens, and when nobody else is willing to move. It wasn't that people didn't have money in 2008. It's that they were paralyzed.
Wisdom number 2. Be fearful when others are greedy, and greedy when others are fearful. Be ready to act and invest when others are paralyzed and unable to invest.
Why should we be able to, predict the future of every business any more than we can predict, what wheat yields are like?
Wisdom number 3. Nobody can predict the future. It's futile and a waste of time and energy. So do not try to predict the market direction.
Various reasons for exiting positions. One is if you need the money, but that doesn't happen very often with us. But it used to happen on every decision I made when I started, when I was 20 years old. A worthwhile investment for Berkshire, and we're in it, and we're in it for keeps.
Wisdom number 4. Unless you need the cash, if it is a great business, keep it. Great businesses will continue to grow and do well. It is hard to time the market. Selling a great business will likely cause you to miss out on future growth of that business.
People have speculated how I've decided to really put a lot of money into Apple. I can't. One thing that Charlie and I both learned a lot about was consumer behavior. We didn't learn how to run a department store. Now, the next one was See's Candy, and See's Candy was also a study of consumer behavior. We didn't know how to make candy. There were all kinds of things we didn't know. But we've learned more about consumer behaviors in a very general way, led up to the study of consumer behavior in terms of Apple's products. While I watched what was happening at the Furniture Mart in terms of people leaving the store, even though we were selling Apple at a price where we weren't even making any money, but it was just so popular that if we didn't have it, people left the store and went to Best Buy or someplace. And if you know the Bumpkins, they can't stand anybody leaving the store, so they behave accordingly. But then you learned that had to interest you in the brand. And if you talk to most people, if they have an iPhone and they have a second car, the second car costs them $30,000 or $35,000, and they were told that they never could have the iPhone again, or they could never have the second car again, they would give up the second car, but the second car cost them 20 times what the iPhone did.
Wisdom number 5. This ties up to wisdom number 1. In understanding the business, you should also understand the consumer. By understanding consumer behavior, you gain a deeper insight in the demand for the product of the business, and will have greater confidence to invest in the business.
I was 100% responsible for the Paramount decision. I read speculation that one of either Ted or Todd had some involvement in that. No, it was 100% my decision, and we sold it all, and we lost quite a bit of money, and that happens in this business too.
Wisdom number 6. Warren Buffett lost money investing in Paramount. If and when you make an investment mistake, do not beat yourself up. Even the best makes investment mistake.
Reported that the Treasury market is about 6-fold larger than before the 2008-2009 crisis. Do you think that at some point in time, the world market will no longer be able to absorb all of the U.S. debt being offered?
Well, I would say the answer, of course, I don't know, but my best speculation is that U.S. debt will be acceptable, but for a very long time, because there's not much alternative, but it won't be the quantity. the national debt was nothing to speak of, for a long, long time. And then it won't be the quantity, it'll be whether in any way inflation would get let loose in a way that really threatened the whole world economic situation, and there really isn't any alternative.
Wisdom number 7. Unless inflation flares up, U.S. debt will not collapse, as there is no better alternative for bond investors. Therefore, do not fear an implosion of the U.S. debt market and financial system.
I believe in trying to find what you're good at, what you enjoy, and but you can be kind, and the world's better off. I'm not sure that the world will be better off if I'm richer.
Wisdom number 8. Rich people do not make the world a better world. Kind people do. Be kind to others. Be kind by subscribing to this video. Thank you.